Good evening. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Monday, the 3rd of April, 2023, about 6:20 p.m. Central Time. You know, I know it's spring, but it feels more like winter in Chicago. Strangest thing, we had a winter that felt like spring, warm. And now we have a spring that's still hanging on, although tomorrow the big changes. Big storms coming through tonight. And with that, maybe we get up towards 70 degrees finally in Chicago. Right now you need a jacket out there, a heavy jacket. So it's pretty strange. Now today was a day based on a couple of big events. Let's take a look. We had two of them come out. The first one happened over the weekend. And that was when OPEC Plus cut its oil production. And if you add it all up, it could be as much as 1.6 million barrels a day, as Russia's going to extend their cuts through the end of the year, not end it in the summer. And we are looking at OPEC, many of the members, joining in for big cuts. It started with Saudi Arabia with 500,000 barrels, UAE, Kuwait, one after the other fell in line. Now, OPEC is notorious for members not following through. They don't do what they say they're going to do. The big boys do. Saudi Arabia says cutting 500,000. I believe they'll cut 500,000. But once you get to the smaller players, come on, it's dicey at best. We've seen it. I've done this all my life. I've watched what they've done since they formed. And what happens is the little guys say, well, we don't really have to do that. They've cut so much, we can keep ours going. We need the income a lot. And that's what happened. So, do I think you'll get to that 1.6 million? I'll be shocked. Anything could happen, but it's rare that it does. And I don't think the Saudis are going to go, if you don't do it, you got a big problem with us. These people are doing this voluntarily, not by OPEC mandating what each member does on a quota. Do you understand the difference? Very important. So I really think we'll be lucky if we get half of that amount. I think we'll be lucky, by the way. I'd love to see that they don't even get to that. But obviously, even 800,000 barrels, 1 million barrel a day cut over time puts the market what? Well, they're trying to make up, if you will, the supply and run into a deficit to support pricing. That is what the goal is. The problem they have is in part what's going on around the world, not just with us. But U.S. manufacturing today, the numbers that came out, they're the lowest level in 3 years, and they were down in every single category. But the key to me is we knew manufacturing was having problems. We've talked about it on the daily reports here for 2 months. Now what the key is, did the service sector wobble, or is that still strong as can be? If it is, it doesn't matter about that weakness. Then this will overcome it. And that's why the stock market, I think, rallied back later in the day off the OPEC and the other numbers. It's going to be already laser focused on what's going to go on come that Wednesday report. So if we could, let's take a look at the charts and get an idea as to where we're at. First, you've taken crude back to $80. That's the first thing. The Biden administration absolutely blew it in terms of not buying between 70, as they said they would, and under. They didn't buy a barrel. Thank you, Bloomberg, Joe Weisenthal. He picked up on the story that I have been pushing and hoping somebody in the big press would pick up, and he did it. And the story was today just put out there exactly as I have been saying for the past week and a half. As I'd go, hey, Joe. He picked up on it. Exactly. I mean, just backed up everything that I was saying. So I feel good. At least I brought it to you first. Next, I'm looking at the dollar index. This is an important time in the dollar index. It's at an absolute apex of something going to happen. And to go along with that, I created a special currency report. Now, in this report, what I'm going to cover for you, and did cover, it's already published on our website, you're going to get the price counts that are unique to what my firm can do, Linn Associates. You're going to get the more research, seasonals. We'll look at the 15, the 5, and the 30-year patterns at this time of the year. We're going to look at the daily charts. We're going to look at the weekly charts, and we're going to look at the popular ETF that covers the dollar index. How do you get it? It's there on the website. It's published right now. So all you need to do is go to iraepstein.com under the word research, or take your cursor, move it up here, give it a click. It'll take you right to that area on the website, and away you go. Could it be easier? I don't think so. My reports are only up for 3 days. Today's day one. So it goes off at midnight on Wednesday, Central Time. Remember, I told you that because so many people will go, Ira, can I get the report? And the answer is a flat no. You follow my rule or you don't get the report. It is my report. All right. So when we look at the S&P 500, you've made a new high over that previous high of 41.47. So the thrust of the market is still up. You can see how it's lifting right here. You know, it's amazing. We just went through this whole banking crisis where you would think everything would come unglued. We hear how much the U.S. economy is faltering at this point. We hear how the bank tightening is there. And yet you have a market that has rallied up rather dramatically off those lows. If that doesn't teach you that the charts know more than how you analyze the market and your fundamental analysis as you try to apply it, shame on you. It's there in front of you. This trend is up. The market came in, fought its battle as we talk. First, it fought it on the way back up. You can see that. And fighting at the 100, the 200, the 18, it did it for a while. And finally, when you cleared this high, it just moved out to the upside. So where's the resistance in the market if all the moving averages are there? You're at it. The upper Bollinger Band. The market's hit it now 1, 2, 3. Today's the fourth day in a row that it's hitting it. How many days did it close over the band? Maybe we should look at that. You can't count tonight because we don't know where you're going to close. But you can certainly count Monday. That's day one. You can go back and you can count Friday. That was day two. It was not the case on Thursday. So what we have is a market right now that has latched itself temporarily onto the Bollinger Band. It's not yet what I call my gorilla glue trade. And it's important when you know what that gorilla glue trade is, because what takes place is when you get that, you get an embedded reading out of the market. Embedded means these two numbers are going sideways over 80 on my, and I want to use this very carefully for you, the way that I calculate slow stochastics. It is different than the way your standard way of doing it is at home. I ran it by the gentleman that developed slow stochastics, George Lane. I used to have a TV show in America on the FNN network, which is today CNBC. And we had a show stocks, options, and futures. And I would interview everybody that was big in the market. It was everybody from the Joe Granvilles, the Robert Prechters, George Lane on it, the people that were developing RSIs, MACDs, everybody. And the beauty is if they wrote a book, they had to come and sign the book over to me. And then we'd talk, and I developed a relationship. John Bollinger was on my show numerous times. And I had ideas, I'd study, I'd learn, and I'd throw them out if I developed something. And most of the times I didn't. They had the better way of doing it that I ever came up with, and I gave up on that. But I saw something in slow stochastics that to me was an accident when I discovered it. I brought it to George, showed him what I had discovered. He loved it. And I just kept it like that. He's no longer with us, but that is a true story. And to make a long story short, I found that the personality of slow stochastics is so much better than the RSIs and the MACDs. It doesn't go from overbought to oversold. It can go from overbought to locking in an even stronger trend. People don't get the concept. It can go from a bear market to locking in an even stronger bear market. Most of the time, it will meander between overbought, oversold, but it changes. And it changes a lot into that embedded. Once you latch onto that, it tells you two things, the strength and because momentum often leads price. When it loses the momentum, I have discovered that more times than not by a lot. I am not saying 90% of the time. I'm saying probably 2/3 of the time or more has been my experience level. You get an extra period of time to come out of those positions, long or short, and then the momentum takes the market where I thought it was going to go more times than not in the terms of the momentum. Interesting way to look at it. But if we embed, and it takes 3 days to embed on my numbers, day one, you can't count today. I don't know where today's going to finish, do you? You're a magician at this hour if you do. Day one of embedding, day two, not day three. Today's the key day. If it embeds, guns come out of the holster, I stand there ready, give me the brakes in the market. It's that simple, all right? I make it sound simple. It's a lot harder. You have the embedded rating already in the NASDAQ. So I think the pros will buy the market within a certain method. Now, I teach the methodology in my enhanced Bollinger Band course. So if you're going to want to do what I do and you're going to want to study that, take the course. First, my numbers are going to be different. When you become a subscriber to my research, I give you the formula to my research. Am I clear with that? The second thing is you will see how that then works, and you start applying these principles to it, and you say, oh, what's the other rules? And I lay each one out. It's a video chapters. You see what I do, you do the same thing, and you can grasp the knowledge. I promise you, I've yet to have people that if they put a little bit of time in it, within a day or two, they got it. Day or two. We're not talking month or two. Day or two. Just go over the chapters and go, whoa, that seems simple enough. Then I reinforce it every morning when we meet in the morning, because you do get, when you get my courses, you get at least 2 weeks of my full research on both the futures, everything, and then the ETF in the morning. And I reinforce this all the way through. Most people then, I hope they become subscribers and they stick with us because I show you all the tricks I know. Okay, so in looking at it, I do think this market's setting up for a buy. There's a caveat, and now my people in the mornings know that. Not so here. You're just overbought. You're in a lot of resistance. I think the pro money's coming out in the Dow right here. I wouldn't be surprised if you get a reversal here as the market gets nervous about what's the service sector going to show. Now, let's assume the service sector comes out strong and employment stays strong there, and you're seeing the opposite of the manufacturing. What does that mean? Well, that keeps the Fed fully glued, foot to the floor. Another hike. If it weakens, game may change. Could that be bullish then, stocks? That gets interesting. Overbought in the micro mini Russell. Now, I think the pros will come out at the upper Bollinger Band area, and you're just about knocking on the door right now. T-bond market, trend is down. You found support. Now, remember, the higher this market goes, the lower real yields are going. You should run into a buzzsaw here at the 132.31 area is my guess. In the 5-year note, you should run into the buzzsaw right up here, as you can see. Trend is still up here. If you can get through these numbers, can you go down? I'm going to come back. I want to show you something. I'm not convinced you do. Look at how narrow these bands are getting. Guess what's going to happen, in my opinion? Volatility is going to come out of this market. Typically, when these bands narrow in, it's a warning sign that the market's about to take these big ranges and narrow them in very dramatically on you and sit that way for a bit, and then the game starts afresh. In the dollar index, before I get too far, I've done my dollar index report. So I have created a special report. It is available on our website. And in the report, I cover in great detail for you a lot. Now, we're going to cover price counts, which gives you an idea which way the market might go with the unique study that we created. And yes, we can make that available so you learn how to do it, but you need our charting software to do so, because we won't share the formula and it's not available on other charts, but you'll see what it does. Seasonal charts from the Moore Research Center. We'll look at the 15, the 5, and the 30-year pattern in the dollar. Then we're going to start looking at the futures first. We will look at the weekly charts, break them all down completely for you, all the different studies. Then we'll move to the daily. And then with that same analysis, we're going to move to the popular ETF that does the dollar index. So if you like to see this, it's simple. Move your cursor to the top. It's there. It'll give you a link right into it. You can go to iraepstein.com under the word research on the top of the chart. The report will go off our website at midnight Central Time this Wednesday. My reports only go up for 3 business days. All of my subscribers, they saw it because I put it up over the weekend, so they've had plenty of time at this point. Those that want to see it have seen it, okay? They get things typically ahead of everybody else. All right, so we take a look at that. Let's come back here to the dollar. First, big resistance at the 100-day average in green, the 18. Are we going to embed? Okay, so you've got the numbers. Both numbers are under 20. And let's get over here to, let's go one more day. Here we go. Wednesday, they weren't embedded. Thursday, both numbers under 20. Friday, both under 20. Monday, both under 20. So you have your embedded reading. What do you do with it? Go see the report. Now you learn what's going on. In the eurocurrency, not embedded, just overbought, trying to embed. We could get very close here because they're mirrors, but inverse to each other. If you're being bullish on the euro, you want to be bearish the dollar index. I teach my traders, at least that will listen, you don't go long the dollar and short the euro. You don't put on a short dollar index and a long euro. One or the other. Okay? And the charts will tell you which one is often stronger or weaker than the other. In the British pound, this is that embedded reading at work. Take a look. This is the highest high the market has recently made. I am jumping up and down for joy, as you can imagine why. In Bitcoin, we have a higher high, lower low. You're flirting with losing the embedded reading. If it's lost, prices will probably retreat back to 26.88. The key is, will it be lost on the day? That's going to be the key. When it's lost, the game goes back to neutral often. I didn't say every time because game can change. High percentage, yep, but it's got to stay lost. That's the key. Brent versus WTI. So you had a big bounce, and now the market's waiting to see what's going to happen. First, on the Brent, you got up today to the Bollinger Band 200-day average. If you were next to me, even with all this bullish news, my elbow would have gone like that into your rib cage going, if you're long, what are you waiting for? This is your gift. And you'll say, but I'm going to hold on because they're going to do this, they're going to do that. And I'm going to go, you're overbought. You're at a combination of the 200-day average that you haven't seen in the Bollinger Band. And you want to tell me how high it's going to go. I'm sure you're right. You know what I'd be doing. WTI, identical thing. It doesn't matter if it goes higher. The high percentage is if you were long, and coming in, all the setups were bullish. If you were long, that's where you're headed. How long have I been telling you that I thought that the spring play, spring-summer for gasoline was on its way? You tell me. I think I stuck my neck. Well, the videos are there. Go on YouTube. Just go back a week. They're there. Now you're up to what the goals were. So now, what do? Well, you're overbought. You're not embedded. If it embeds, we get even more bullish. If not, we wait for the market to come back, give us terms that we like, not that the market likes. And last but not least, until we get past this period right now where you're not that cold, you have no need for the air conditioning systems yet in most of the United States and other parts of the world. The demand isn't there other than you're producing to put into storage. And that doesn't make the price lift. Now, as we get towards warmer weather, you look for that in the United States. When these storms leave, and they're brutal going across the U.S. right now. If you're watching how many people are dying, how many hurricanes, tornadoes, it might be record amounts. As this leaves, behind it generally comes the warmer weather. Why? Because we're in April. Those April showers, remember the song? May come like May. You've got it. Now you know. And then the flowers come, and the warmth comes with it. And with it, the need for the air conditioning. So as sure as we're talking, those are the things that I look at. So again, if you like that dollar index report, move your cursor up here, view it. If you like these videos, please give me a thumbs up, and I'll see you tomorrow.